Hey there, traders. Todd Gordon of tradinganalysis.com. Hope you're doing well. It's Thursday, November 2nd after the Fed, and the Fed left rates on hold. Chances of future hikes in December are below 20%. They upgraded the economic assessment of where they see the economy, and obviously we have overseas concerns, but everything that's happening here in the States is pretty good. We had a very sharp rally from technical support. I'll show you that in this video. A few of the things I want to show you first before we get into the technical position of the indexes, and I'll show you one stock that I really like. I want to look at a report that we did yesterday, look at some of the internals and some seasonality of this market. So we do something every week called the SIS, Sector Industry Stock Report, and I'm going to flip through and show you a couple key parts of this report that I think might be helpful for you. So the first thing is internals, and what you're looking at here is the S&P in magenta, and then the advanced decline ratio here below. And what I've done is put a 10-period simple moving average over it to smooth it out. And what you're going to see is the S&P makes a new low here at the end of October into 4,100. The advanced decline makes a higher low. And you can see the lows are getting higher, right? So we're not seeing as much negative downside breadth creating a divergence. Number two, let's look at put to call ratio. Look at the options. S&P makes a new low into 4,100. The put to call ratio makes a lower high. So we had a lot of put buying relative to calls on the first push down here into the end of September, early October. We did not see that same kind of panic via put buying as the S&P made a new low just recently. So divergence there. And number two, as I say right here, it's still very overbought. So the put to call ratio has quite a ways to fall, and you can see what happens when the put to call ratio gets overbought, like it did back here, and it falls. Generally good things happen. All right. Now let's look at equity only put to call ratio. So you take out some ETFs that don't really have a bearing on direction of the stock market, and it's a similar message, right? So this is going all the way back to 2015, and you can see periods where the moving average of the equity only put to call is very overbought. Overbought here, market low. Overbought here, market low. Overbought here, COVID low. Overbought here, market low off of the significant decline, and here we are again. And it's not quite as elevated as we've seen in prior cases, but this is a much less significant market decline than what we've seen here, and to a lesser extent here. So again, very overbought, a lot of fear in the market, but again, we have clarity as to where rates are on the short end with the Fed, long end on 10-year, and we'll talk about that here in a sec. Seasonality. Okay, this is kind of cool. October, I didn't know this until I did the seasonality study of the VIX. October is actually a positive month for volatility going back 33 years, 1990 to 2023. So even though October is about a plus 3% month in terms of VIX, it's the first month in the last three of the year in Q4 where you're getting positive gains. So VIX is up in October and the stock market's up in October, and then it flips quickly as November and the S&P is the best month of the year, and also in terms of volatility it's the weakest month of the year. So VIX up, S&P up. So we have a ton of seasonality working for us in there. Okay, another thing I want to talk about is let's talk about value growth. Okay, we always look at the ratio of value stocks to growth stocks, and that kind of gives you an idea whether the market is risk on or risk off, if you want to be focusing on tech stocks. And this is a ratio, value growth. As the blue line's moving up, that means value is outperforming growth. Growth is underperforming value. And from 21 into 22, as interest rates are spiking and the inflation spike, clearly people don't want to be holding growth stocks, you want to be holding value stocks, right? Well, what happened is interest rates, even though value growth started to peak and value was underperforming growth, growth outperforming value, the 10-year yield started to make its quest on up to 5%. But the value growth ratio was like, yeah, that's nice. Growth was continuing to outperform. And all we've done here from the market top in July was consolidate sideways, and we're starting to break down here again, which means growth is outperforming value. I'm wondering if that's going to help put a top into the yields. Okay, so are we at the high for yields? Okay, we'll cover this another time, but we're seeing continued rotation in on the relative rotation graphs. Mega cap growth is continuing to go, and if we can get a rotation here on the weekly RRG, that's going to only confirm that growth is in a very solid leadership position despite the sell-off that we've seen in July. So if we look at the stock market, here's the NASDAQ. We just completed something that I call the triple Lindy. If you remember the Rodney Dangerfield back to school, he's jumping off the triple diving board there. Well, we just did a pretty complex Elliott wave correction, and this is pretty advanced stuff, but it's fine. And just take my word for it. This is what they call a triple three. All right, so really it's like the PhD level of corrections, but it's ABC, connector X, ABC, connector X, ABC. We went right down into fib support zone, into an upsloping 200-day moving average. We have the 50-day moving average just above us in the NASDAQ, and we're going to have some downtrend resistance off of the peak coming in at the current angle of ascent at about 15,200 in the NDX. Okay, so looking pretty solid there. One stock, actually I told you I'd give you one, but I'll give you two. NVIDIA was a little concerning. Chips have taken a little bit of a backseat on news that they're not going to ship the high-end, I forgot what they're called, H7000 or 8000 chips to China due to sanctions and stuff like that. So that was hurting NVIDIA in the semi space. But the good news is NVIDIA went down into some deep fib support, has held, and we're beginning to try to push up. So NVIDIA is looking solid. We have Apple coming up tonight. We have good fib support zone in Apple, and if we can break up through 178 downtrend, resistance is broken, wave 4 is complete, and I think the stock you have to focus on that crushed earnings. That if you look at this chart and take all my crazy Elliott wave stuff out, beautiful, just a big old cup, little handle coming back. I mean, this thing is just aching to break to new highs, especially after that strong report. And if you look at the wave count, nice ABC down in wave 4, held the 200-day, up in 1, down in 2. We are looking to break up to at least the 100% projection, which is 365, and then the 1618 is at 392. All right, guys, hope that helps. I know there's a lot going on in this market, a lot of fun. Check us out, tradinganalysis.com. I'll see you guys in the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.